All right, good afternoon. It is Sunday, April 13th, 2025, and I'm just doing what I'm hoping to be a quick video, and by quick, I hope it's going to be less than 30 minutes, to recenter, refocus the Price Bob strategy thread at Forex Factory. So, first things first, I want to make clear these YouTube videos and this YouTube channel is meant to serve and support the work of the Price Bob strategy thread at Forex Factory. It is not the other way around. I am not using Forex Factory to help me build some sort of huge YouTube following. We currently have about 40 subscribers to this channel. Frankly, I'm surprised to have that many. Using these videos just seems to be, to me, a useful and helpful medium for communicating and furthering the ideas and interests of that thread without having to write 2, 3, 4,000 word posts where no one's going to read that. Probably very few of you are going to watch these whole videos, but to me, it's easier to listen to and watch a video than it is to read through some of the lengthy posts at Forex Factory, and I include myself amongst the offenders of excess verbosity at Forex Factory. So that's first. This is all in support of the Price Bob strategy thread. Which brings me to the second point. The Price Bob strategy thread, the central focus, the main focus, is using the Mebob concept, which is a fixed reference bar methodology, to define trade setups. So the main focus is to build hypotheses around particular bars during the trading day, which we will identify by time. So, for example, the Mebob bar, as identified by Robert Falk, the originator of the Mebob method, is the S&P 500 5-minute bar that opens at 10:05 Eastern and closes at 10:10 Eastern Standard Time, or Eastern Daylight Savings Time. But that's our main focus. We are not concerned with any concepts from any other trading methodology, vendor methodology. We don't want to hear about ICT, don't need to hear about order flow, liquidity grabs, liquidity traps. Frankly, my feeling on all of that is if you're a regular retail trader like me, that stuff's all BS that was designed by someone else to help them sell you something. Whether it's a trading platform, a trading course, a mentorship, or build a YouTube channel that pays tens of thousands of dollars each month in revenue to the creator. We are really keeping it simple here. No one's going to run out, I would hope, and try to sell anyone a $1,000 trading course based on a Mebob bar. So everything we're doing is something that should be easily understood by the participants in the thread. And if you have questions, ask your question in the thread, and either myself or one of the others will help you and answer the question the best we can. So that's that. This is not a commercial enterprise. There's no commercial intent, and our focus is on the fixed bar methodology, whether that's the Mebob bar, whether that's an opening range break strategy, or some other strategy. I would extend it also to the idea of having a fixed reference bar starting point and trading reversal bars. And I'll get into what a reversal bar is in a few minutes, just so there's no confusion there. So that's that. That's the beginning of this. So this is my regular workstation. There's a couple added charts for the purpose of this video. We have this chart, which is my sort of a post-trade analysis chart. I just have a range indicator below that tells me the range of these current 5-minute bars. And look, 41 3/4, 49 3/4. I mean, even the small bars, 14 1/4 points. These are 5-minute bars. That's nuts. Anyway, and then this numbers the bars. Anyone familiar with Al Brooks is going to be familiar with this practice. And it just makes it easy for me when I'm journaling at the end of the day. I can take a picture of this chart, save it. I actually have a template that I can switch to that's printable with a white background. I can print it out. I put it in a 3-ring binder with plastic sleeves. Actually print it out on a big piece of paper, big, 14.5 by whatever, legal size paper, and I have plastic sheaths that the charts go in. I keep a nice journal, and I'm able to type up a summary of my trades that day and any observations, and by numbering the bars, I can note them. But I'm not looking at this during the course of trading. This is the only chart I'm looking at right now. The green highlighted area, of course, is our Mebob bar. This is the 5-minute ES. This shaded area is the Mebob shading. I just added that today. I've not been trading Mebob for the last week, and I probably will not resume Mebob trading for some time in terms of the specific Mebob bar at 10:05. Reason is my work schedule is such that I work in a seasonal industry in the Northeast area of the United States, and the real busy season for me usually starts around April and continues through about the end of October, at least the end of September, end of October. Still work the whole year, getting paid the whole year, but in terms of the commitment of time where I got to be away from my desk at home, away from my desk at the office, and actually out in the field working on site, that's where I spend most of my hours from April through October. Whereas from November through the end of March, I'm usually mostly in the office, an occasional meeting, occasional work site visit, but otherwise I am more free to follow the market the whole day even. So, but this is my normal chart. I've been doing what a method that I'm in trading from YouTube called super scalping. I did post links to those videos in the PriceBob strategy thread, so you can go hunt them down and watch them. Also, nothing I'm saying here should be taken as a recommendation on how you should trade, anything like that. This is solely, this is like a club, right? The PriceBob strategy is a club for people who have a similar interest in trading and a similar interest in exploring this type of a methodology. But I am not implying that any of this is profitable for anyone. Your results could vary from mine, all that horse crap. Anyway, I'm in trading does this thing called super scalping. His approach is a little different from mine. In his approach, he trades the NQ, and he will change the time frame, maybe the interval, I should say. He'll change the interval of his candles so that he keeps the average range more or less the same. He trades the NQ. At the time he made his videos, he said he liked to find price bars where the average range was between 6 and 9 NQ points. And at that time, he said sometimes it's a 15-second chart, 30-second chart, minute chart. I don't know what he's using now. 1.5-second charts. The like 4 to 6, 6 to 9 points on the NQ is. I mean, I've seen 6 to 9 point spreads on the NQ these days. What what I'm doing is very similar, but I'm staying on the 5-minute chart. I feel very comfortable, especially with the ES on the 5-minute chart, and I'm basically scalping inside of these 5-minute bars. Not going to go into how I'm doing it. It would probably just confuse things. And again, the point of this video is to really center us and center the price bob strategy thread where it belongs, and that's on fixed price bar methodologies. And so 2 things prompted me into wanting to make this video today. The first, of course, is just so many distracting posts in the thread that we really don't need. There's no reason to talk about ICT concepts, order flow concepts. It's all garbage, in my opinion, when it comes to the thread. Doesn't mean it's garbage overall. It has its place, but it has absolutely no place in the price bob strategy thread. It's only going to do what 99% of trading forum threads do, and that is confuse the people who are trying to learn something. So we're going to focus our attention primarily on price bob strategy, which simply means fixed reference bar strategies. So the first thing that prompted was just the distracting posts that we've received. But the other is a really great post that was made recently. I'm going to pull this up. So I copied this. New user at Forex Factory, F. Kronloff. I'm not sure I'm pronouncing your name correctly. I apologize if I've butchered it. But I did want to recognize you because I really appreciate this type of participation, this type of a post. What other instruments than the ES can be traded using the Mebob, and what are the Mebob candle times for those instruments? I have possibly found a working variant of the Mebob, but it finds trades relatively rarely, therefore trading it on multiple symbols would help. I love this post. My only criticism of it would be if you found what you think is a working variant of the Mebob, why not share it with us? Take a picture of a chart, or at least describe what instrument are you looking at, what bar interval, is it a 15-minute chart, 5-minute chart, 4-hour chart? Don't leave us hanging, fill us in. But I 100% support and appreciate this type of a post. My response, which is inadequate in my view, was that some possible reference ranges that I've tested include the M15 and M30 NQ before the 9:30 New York Stock Exchange Open, various ranges on M15 and M20 on bonds, and M60 bars on gold. I also consider this as a sort, I don't know if it's a subset, or I don't know how it relates, but the highest open, lowest open hourly charts where I trade holo using crude oil on an hourly chart, referencing the highest open and lowest open. Very similar approach, right? This approach is simple and has multiple possibilities. Test, test, test. But first, have a hypothesis. So up here, I have possibly found a working variant of the Mebob. Well, whatever that is, that's your hypothesis. Now you have to test it. Now, one thing Cromwell says is it trades rarely, so maybe trade it on multiple symbols. At the same time, if it trades rarely, if it has a decent enough edge, that might be all you need. What is rarely? I don't know what rarely means. Once a week or once a month, big difference. If you found something that has a 90% win rate and trades 3 times a week, you got a winner. Let's see. So the hypothesis is simply defining a reference bar, then test it. Driven, who is one of the users here at Forex Factory, he apparently posted some favorable edges on the YM in the thread and then deleted them. Not sure why, but I wish he would have kept them there. But apparently he has found what he feels are some favorable edges on the YM using a Mebob-like concept. Choose a bar and then test it. Close that out. So I got these 2 charts here, and I'm just going to show you how I would approach testing and what I mean by this. So this is going to be 6J. This is the Japanese yen futures. And what I've done here is, this is the whole blue region here is the Stacy Burke trading window, timing window. This is the New York timing window. 8 a.m. It opens at 8 a.m. and it's going to close at 12 noon, 4 hours. And these are the hourly candles of the Japanese yen futures. So, and I just randomly went back to the week of March 24th. So I did not do this back test yet. I just, looked at my calendar and went back what was essentially 4 weeks, right? Maybe it was 3. I meant to go back 4. Anyway, here I am. I got it all set up for March 24th. Going to do a back test. I also have a second chart that I use for these back tests. These are 5-minute candles, and I have hourly candles superimposed on top. I use this chart when I need to see whether or not did price go to my profit target first, or did it perhaps retrace and hit the stop loss first. Oftentimes, it's perfectly clear from this chart what happened, but sometimes it's not. And so I will, to make sure my test is accurate, I'll back check here. So this is already set up, 5 minutes, New York, the range on the 20, oops, I'm on the 11th. Oh, it went to today, April. Let me go back. Do I have enough days loaded? I mean, that's what happened. No, I got the days. All right, so let's go find. It's going to be this. I apologize. I thought I had this all set up. Okay, so here's how I do it. I have a risk-reward tool here. So my hypothesis is, or the question, this is all scientific method, is the 60-minute opening range of the New York timing window significant in terms of providing a breakout strategy on the Japanese yen? And that's all you need for a hypothesis. You just pick a time frame, pick a bar interval, and then identify the bar you want to test off of, and then you'll need a risk-reward tool. And so it would be a buy stop above, sell stop below. We obviously broke below. And what I would do is I would have a spreadsheet. I would use Excel or Google Docs, create a spreadsheet. It would have the date, it would be the date, and then it would have the direction of the trade that was triggered, long or short. I would have a column for a 50% stop loss and just yes or no, a 1R stop loss and then just yes or no, a 1R target, yes or no, and a 2R target, yes or no. And then the final column would simply be what was the best or worst result. In other words, did it get to a 1R profit target and then reversed, and it would be 1R. Did it get to a 2R profit target? So I would put 2R, 1R, minus 1/2R, or minus 1R. And I would just track it in terms of R, risk unit. And at the end of my test, do I have a positive return? Is my profit 6R, or do I have a minus 8R loss? You just add them all together. But I would spreadsheet it. So in this case, now the question is, I see that this price bar did penetrate the 50%. So I'd want to go here, and I'd say, okay, entry was here. Entry was here. It did not retrace to that 50% level was traded before the trade had triggered. So now I'm going to go to the next one, so we're prepared, just in case I need it. So this will be a 2R target. It'll hit both 1R and 2R. And if you want, you can then also figure out a way of doing a trail. Maybe you're running a stop loss above the high of the hourlies, and then exit at the close of 12 noon. You can test it any way you want. What you want to do is just have your parameters so you know what you're testing, and then spreadsheet it. It really isn't enough to just do this. You can do this visual stuff like we're doing here, but you're going to feel much more confident about your ability to actually forward test it, which is when you're actually going to trade it in the live market. You'll have a lot more confidence in it if you have spreadsheeted your results. And 1 week isn't enough. I would probably spreadsheet 20 days before deciding I was going to forward test it. Go to the next day. Again, we're looking here. And on this particular day, we can see it made a 1R target. It would have been filled. Definitely didn't hit either stop loss before hitting that. And it did not reach a 2R target. So, you'd have an N for 1R loss, N for half R loss, Y for 1R profit, N for 2R profit, and you would add a 1 to your total. So now we go to the next day. And we can see this fired short. We can see it didn't come close to either stop loss. And again, we got to a 1R target, didn't get to the 2R. And then you would record it in your spreadsheet accordingly. And we get up here. And this was both either a half R or full R loss. Didn't reach either of the profit targets. And here, again, did not touch either of the stop losses after entry, and it made both 1R, 2R. And of course, again, if you are interested in doing some kind of a trailing, you can do that. Whoops. So that's how I approach this whole concept. This has been my primary method since I had what I call my roulette epiphany. It is just a simple, it doesn't get more simple than this. In fact, now that my work schedule has resumed, I am looking at other markets such as the yen futures, bonds. Is there a profitable strategy such as, this one looks good, but it's just 1 week. I'm sure if you did a month, it might still be a good strategy, but it probably wouldn't look as good as it did this week. So don't think you found a holy grail based on 5 days, but test it like this. Go back 40 days, 20, 30, 40 days, and record the data. Yes, it is work, and typing into a spreadsheet is work, and it's time consuming. And sometimes you'll get halfway through your back test and you'll realize that you should really be recording your data differently, and you'll have to redo all the columns and go back and restart the test. But it's worth it. It is so worth it. And that's it. That's what I wanted to cover today. Again, these YouTube videos and this YouTube channel are 100% in support of Forex Factory. There's no commercial intent whatsoever. There never will be. My goal, I'll be quite honest, my goal for the last 3 years has been to become consistently profitable and increase my trade size so that I have $1 million year. And I don't see why not. No, I could not do that trading spot Forex. I believe the only way you're going to have yourself your $1 million year is if you give up Forex, probably give up CFDs, contracts for difference, and get yourself a broker where you can trade exchange listed US based futures or European futures, DAX, FTSE perhaps, Nikkei futures perhaps. I'm not at all familiar with how they trade. I'm just saying you want to be on exchange listed futures, but that's my goal. And here's the thing. When I hit that $1 million, I love Forex Factory. I've made some really good friends there, and they're always going to be my friends, and we're always going to remain in constant contact. But with respect to posting to a trading forum, I'm going to be like an old pair of Levi's, and I'm just going to fade away. My goal is to eat what I kill. I do not intend to fail. Failures sell trading courses. People who, I think that's true. I think people who don't become independently wealthy trading, sell trading courses. If someone is selling a trading course, even if it might be worth its while. So, for example, you all know I like the Al Brooks trading course, but for the life of me, for what he sells it for, and for what his sales probably are, I have no idea why he would have put that much time into it. I mean, he can say he likes to teach, he can say, it's all BS. The only reason to put that much time into a trading course is you're not making as much money trading as you would like. Doesn't mean you don't know what you're doing, but I don't know. So my point is this, I am not going to fail. I'm going to have my $1 million year. I think it might be this year. And if not, it'll definitely be next year. Like, I'm that close. I know it, I feel it, I see it. And I think I can, in the meantime, through the price Bob strategy thread at Forex Factory, help bring some other people along. Maybe not $1 million a year, but consistently profitable, pass your first prop firm challenge, get your first prop firm payout, earn enough from a prop firm that you can fund your first futures account with a legitimate broker. There's all kinds of stages along the way. We're all at a different spot, but we're all hoping we're heading in the same direction and toward that $1 million year. And so that's why I really am trying to keep the Price Bomb thread focused, because I believe that this method, more than anything else I've ever seen, and I don't mean necessarily specifically Mebob, I mean the strategy of the Mebob, the idea of finding a price bar that sets up profitable breakouts. So there's the opening range breakout, there's a Mebob breakout. That's basically it, other than Blue Steel is doing some really interesting work, in my opinion, on 4-hour bars and how the close of, for example, the 4-hour bar that closes at 10 a.m. on a Globex chart and the 4-hour bar that closes at 2 p.m. on a 4-hour chart. I think Pip Cruiser has also mentioned that there seems to be some interesting potential worth studying with respect to what price does subsequent to that close. So that's what this thread's about. This thread is not about ICT, liquidity grabs, liquidity whatevers, fair value gaps, order flow bunk, all that stuff. There's thousands of threads available on Forex Factory for that stuff. We are going to focus on fixed bar methodologies. They don't all have to be tied to the New York session. Let me just go on here, this is really so if I just turn these back on, and these are the Stacy Burke timing windows. We have, what happened to my London session? Oh, should be 6. I was looking at a 30-minute on something else earlier. All right, so the green is Asia, the yellow is Europe, the blue is New York. These are the Stacy Burke timing windows. You can test any of these. Are you a European trader? Test things out in this session. You're located in Asia, or maybe those hours are more convenient for you. See if you can find an edge out here in the Asia session. I'm usually, not trading during this time. I'm with my family, eating dinner, going to bed, sleeping during Europe. So this is when I tend to look for my edges. But you can look anywhere in any of these timing windows. So 7 p.m. until 11 p.m. Eastern at night, 3 a.m. to 7 a.m. Eastern, or 8 a.m. till 12 noon. But if you're going to participate in the price bomb strategy thread, let us please stick to this methodology. I welcome any and all exploration of this methodology. If you want to come and say that, hey, I found that if you trade the breakout of the 1083 o'clock 23-minute bar, that there seems to be an edge, I want to hear about it. I want to see your work. I want to see your charts. I just don't want to hear about anything else. I don't want moving averages. I don't want to hear about VWAP. I don't want to hear about, just any of the other stuff that you just can hear anywhere else, most of which was made up and popularized by someone who was trying to sell you something. The one thing about Mebob, Robert Falk, who came up with this method, he was a regular guy, just like any of us here, had a love of the markets, enjoyed trading, and enjoyed the camaraderie that trading brought him. And he shared this method freely with his friends. So that's what we should be doing in the price bomb thread. Thank you for listening.